Many business owners, especially the healthcare professionals, doctors, therapists, chiropractors, dentists, this is always what we've been hearing that you should be an S corporation. But the question is it really automatically that you need to be an S corporation? What's up, everyone? This is Christopher Waikoko. I'm the current chairman for the Nurse Founder Forum, and welcome to our Business and Brews Tuesday. If you're listening somewhere, please type your name or professions and states, and please let me know. Comment below as we are going to go over with choosing the right entity for your company. All right, so let me have I have to share this screen, and this is a common conversation that we're having. We've been operating for more than 15 years with serving 10 states. From some of my clients are in California, New York, and this is a common dilemma for them. When is the best time for them to be an S corp, or should they be stay as an LLC? So we are gonna go over with the following. There are the three. Here are three reasons why an S corp may not be the right fit. But before anything else, what is the initial business structure? For those of you that are in service, especially you have a license that you need to do a business like doctors, dentists, chiropractors, therapists, all of this, even lawyers and CPAs, you need to be at least a PLLC. What is the difference of PLLC versus LLC? Here in Texas, LLC is limited liability company, where the PLLC is the professional limited liability company. The main difference is the professional limited liability company, you need to have license. You need to be a licensed doctor, therapist, dentist. All right. However, the limited liability company, these are more for basic general business industry, whether you want to sell, even real estate is also need license. But for those of you who would like to open a store, like a Halloween store, those retail brick and mortar, coffee shop, restaurants, don't does not require the professional license. All right, so that's in the get go. And one of the questions they told me in working with startups, do can I be a sole proprietor without LLC? I don't recommend that. The reason why you don't have asset liability protection, because this is what happens. So, for example, Gloria, she's a doctor, but she also opened a coffee shop. And then in her coffee shop, she doesn't want it under unlimited liability company. So anything that happened there, let's say a customer, John Doe, would sleep while he's getting his coffee, or even he burnt himself, the customer could easily directly go to your personal asset. All right, so that is the main difference. When you are a limited liability company, basically you're doing business using a different entity, because your LLC has its own employer's identification number, and any transaction that you do, whether you're leasing the office, leasing the place to a property management company or to a broker, you don't put your full name there and your social security. So basically, you're doing business as what Gloria Coffee Shop LLC, and that is the entity that represents your company, and it doesn't go directly to your social security number and your personal tax return. All your assets will have a or maybe it's a second line of protection against all these liabilities and lawsuits. Because the first protection that you would have is you need to have the right insurance, whether it's general liability, error and omission, disaster, what others, the profession, cyber security insurance. So the first line of defense on your company is having the right insurance. Secondly is the limited liability company. Okay, so now, when are you going to be an S corporation? So there are three things that we need to look at. The first one, as you can see, is based on your profit margin. All right, so Christopher, what is the difference of an LLC versus S corporation? The first and foremost, LLC, it's a type of an entity of the business. The S corporation, you could be an S corp but still remain as an PLLC or LLC. S corp is how you want to be treated by the IRS in terms of the tax treatment. Thus, the LLC is being recognized by the IRS. The IRS don't recognize the entity whether it's LLC or not. What they recognize is what type of tax treatment you want to be charged. Okay, so usually when you're single member, LLC, you don't have any business partner. You are treated as self-employed. They will tax you as a 37% every year. But then, for example, with Gloria, she is already a PLLC and as a practicing doctor here in Texas. So now, let's say she started to make the number one reason why you don't want to be an S corporation is if you still have a low profit margin. What do I mean by that? A low profit margin is whatever the remaining amount of money that you have when you take out all the expenses from of your company. So for example, Gloria, $2.3 million that she made in 2025, year 2025. And then out of the 2.3 million, she has payroll costs, she has rent, utilities, insurance, contractors. So out of 2.3 million, her total expenses is somewhere 2.5. So would that be enough reason for her to become an S corp? Definitely not. Because why? I mean, she's making 2.3 and then her expenses are 2.5 million, so she's still in the negative. She doesn't need to be an S corp. Okay. So the only time that you need to be an S corp if your profit margin is already like more capable on putting you on payroll as the manager, as the doctor of your company. So how does it, or how do you mean, what do you mean by enough profit margin? So for example, going back to the situation of Gloria, she made 2.3 million, right? But then on 2026, her expenses is only 2 million and she still had $300,000 on her taxable income. That 300,000 is enough for her to be on payroll. So what do you mean by payroll? So basically, she could put herself on payroll in a regular salary. She could issue herself a reasonable salary. So if there's a 300,000 remaining, what she can do is to do an S corp election. Okay, let's just say year 2026. Now she, like mid year, or she's estimated that she has a $300,000 of net income out of 2.3 million. What she can do is to do an S corp election, or she could hire somebody to do that S corp election to be treated for the year 2026 that she will file an S corp. Okay, so what do you mean by there's a form, S corp election. It's a specific form with the IRS. So basically, the 300,000, she has to issue herself a reasonable salary to how much of the 300,000 that she needs to pay herself. So a reasonable salary in the IRS are determined by different factors. Number one, how many number of years are your experience practicing as a doctor slash manager of your company, right? Number two, how specialized is your responsibility on this company. And then number three, what is the average salary on certain cities? So if Gloria, let's say in the city, she's been practicing in Dallas for 3 years as a doctor, and also in average salary of a doctor here in a 3 year time frame is somewhere like 300,000, then that is the time that is a reasonable salary for her. Okay, so after few 3 months, so if she submitted it on May to be S corp elected, then she has to really pay herself monthly salary beginning June. So there's a retroactive effect, because on that application for the S corp, you need to tell when do you want to be treated as S corporation, and from the time that you want to be treated on January 2026, the payroll should start on that month as well. Okay, so that is the time that S corporation would be beneficial for her. Has it something to do with the number of years that you're in the business to become an S corporation? The answer is no, right? Because there are some companies been in the industry for 23 years and they're still negative, or they're still break even. S- People like this, they don't need to be an S corp because there's nothing to be paid as a salary for themselves. Can I stop? The other question: can I stop paying myself when on payroll if I'm an S corp already, right? So that is gonna go to the second reason why you don't need to be an S corp, because of more compliance requirements. Because S corp require payroll processing, quarterly filings, bookkeeping discipline, and reasonable salary documentation, the one that I've been mentioning a while ago. Because people thought, oh, other people said, oh, I'm not going to file a separate tax return. The benefit of being an S corp is you're not subject to double taxation, but it doesn't mean that you're not going to pay, that you're not going to file a separate tax return on S corp. You still have to file that tax return. And S corp, although you're not being taxed on the S corp, you still have to file 1120S. The deadline of this is May. No, 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 March 15. So you have to file the S corp first before your personal tax return, because the S corp is basically a different. It's your company, and also when you become an S corporation, you're already an employee. You can be treated as employee of your own company. All right, and another thing with the so what are the compliance? So annual filing of S corporation is on or before March 15. If you cannot file on time, you have to file an extension. And do you have to file the S corp before the personal return? Your personal return, your 1040? The answer is yes. You have to file your S corp first before your personal return, because on the S corp will generate a form what you call K1, and that K1 need to be attached on your personal return together with the W2 that your S corp paid you. You also have to attach the W2. Okay, so what do you really save from S corp? When you become an S corp, you actually save as you're not responsible for paying self-employment tax. Remember a while ago, on a single member, you're still subject to 30+% on self-employment tax, but on the S corp, that is not longer the case. You're still you don't responsible. You're not responsible on 15% self-employment. All right. However, remember, when you have a W2 from your S corp, you still contribute with Social Security, Medicare tax, unemployment tax. Your company, your S corp need to pay that in a quarterly basis, monthly basis. So that's why you still need to have an accurate QuickBooks or whatever payroll software that you're using. It's better if you put yourself on salary and automate it in QuickBooks. They can do that, a monthly automation, so you don't forget. And then your QuickBooks payroll could also pay those automatically. So you just have to set it when it's do you want to schedule that payment. And then the other requirement for the, so there's a quarterly payroll report, that's form 941, but there's also an annual report on the payroll called 940. And then there's the 940, it's basically an employment contribution to the IRS. It's all for you too. You could be by yourself on payroll. Some of the questions they have, can I start with 1099 if I'm already an S corp? The answer is no. You cannot start. So for those of you there, are you an S corp? Please comment below, yes or no. And what type of entity structure are you currently right now? So you cannot issue yourself a 1099, because 1099 is a contractor. When you treated elected as S corporation, you're already employee of your company, and contractor, you cannot issue yourself a 1099. All right. And some of them, if you're not paying yourself on payroll, eventually, like you want to do it, depends on your mood, not regularly, that will subject you to be audited by the IRS. Because the reason why, it's because they're not charging you with self-employment tax in the condition that you're issuing yourself a reasonable salary. All right. So important, document rule number 1, and rule number 2, do not forget. Rule number 1. Okay, and this is the other consideration when whether you choose LLC or S corp. The people you need to have, the S corp might not be fit for you if there's wrong timing or business structure. So some healthcare businesses, when they, depending on their growth strategy, they want more investors, and some investors preferred you to a different entity like C corporation. So you need to know your growth strategy, because it also based on your structure, based on your growth strategy. Because some healthcare businesses with future investors, multiple owners, or certain licensing requirements may benefit from a different entity strategy. Because a tax strategy is not one size fits all. The goal is not just to save taxes today, the goal is also to build the right foundation for long-term growth and profitability. If you are in a healthcare founder, nurse entrepreneur, med spa owner, home health agency, or healthcare startup, make sure your entity structure aligns with your goals. So that's why you just have to contact us to book us a pre-strategy session. And as an S corporation, it's not always ideal if your business is still evolving. That's why we do recommend that you have to have a quarterly meeting to your tax advisor, to your accountant, CPAs, even to your lawyer and lender, and some of the people that are private equity company that okay, some business plans to bring, if you're going, like especially in the fintech company, some business plan they want to put a C corp in Delaware, to bring investors or multiple owners later. And then certain healthcare businesses also have licensing or PLLC requirements that need careful legal and tax structuring before electing an S corp status, because when you elect an S corp, it's not immediately that you can downgrade it. Like can you downgrade an S corp? Yes, but you have to wait at least more than 5 years to be on S corp status if you want to scale down again as a PLLC or LLC. So business planning, rapid expansion, outside funding, or complex partnership may benefit from a different structure. And now the key takeaway, the best entity is not based on trends. It should be aligned with your profitability, your growth stage, your long-term goals, ownership structure, and exit strategy. So, guys, that is our snapshot for our business and Bruce Tuesday. What are your takeaways? Please let me know. Comment below. And if you want to book a free strategy session, just get my information, text strategy, and send it to our number 213-724-0790, or you can go to our website at ycotax.com. And future announcement, for if you are here in Dallas, we're bringing the lawyer that represents nurses to the Texas Board of Nursing since 1997. That's going to be on June 25. Please follow me, and we will post the event today. And also, we have the first annual Nurse Founder Forum Conference on July 25. If you would like to be, if you are executive founder, we have a founder pass available for you guys. We're only taking 45 attendees, and together with, if you want to be strategic partner, these are people that businesses serving healthcare businesses. We only have 10 available slots. If you want to find more, just go to our website. And again, if you have further questions, please let me know. And what are your takeaways? Thank you again. This is Christopher Waikoko, Chairman of Nurse Founder Forum, Tax Strategies for Waiko Tax. Stay safe.